Hi there, guys. Welcome to Midweek with Indiacharts. This is your host, Muskan Kapoor, and we are joined here with Jay Vora, who's going to brief us through what's been happening in the market. Without any further ado, I will just get started with the first question. So, we've seen a really nice rally happening in the equity markets lately, and I just want to know if the Fed meet is ahead, what's going to happen tonight. We have the Fed meet. Is the market going to rally as it's going to do, or will things change for us?
Yeah. So before that, yesterday only we got the job opening data, and that had come a little stronger than anticipated. So I think around 10 million was the expectation, and around 10.7 million was the job openings that was there, and that dented the sentiment. So as soon as the data came, the Dow futures sold off, and so while during the day we did not see a much cut, but I mean, prior to the Dow Jones opening, I think the futures were trading up by 200, 250 points, but eventually the Dow Jones indices, closed lower by 78 points. But yeah, that said, so see, we have been speaking about this for quite a while now, that there should be some reason for the Fed to stop. Okay, so either the inflation has to come down or something has to break. So
Correct.
nothing of that sort is happening right now. If you
Hmm.
see the financial markets, they have rebounded. They are pretty
Yeah.
much okay. If you see the bond markets, they are okay. You are
Correct.
not seeing any wild movements over there. If you see the inflation data, um, it is bad. So the headline inflation is coming lower, but the core CPI, that is still very sticky, and it has kind of plateaued at the top, but it is not falling as of now. So they want to see the core CPI coming down, or there should be some indication, because the job growth is happening, the unemployment rate is at the lowest point, or near to the lowest point. So everything is showing that the economy is doing very well, apart from the all the other data, like the housing sales and all, which have now started to cool off, or the PMI data, which is cooling off. So those are all indicating that there is a bit of a slowdown, but at the same time, the job market is not confirming so. And that is where the Fed is probably sticking to its gun, and it is going to hike rates. So earlier there was an expectation that tonight we might see a 50 basis point hike, but with the job opening data which we saw yesterday, I think there will be a 75 basis point hike. And the most important thing now the market is watching out for is the terminal rate. At what point the Fed will stop hiking the rates, and may even think of cutting that. So as of now, that is a bit unknown, and
Correct.
that is what is making the market nervous, and that is why you're seeing a lot of volatility. But
Hmm.
that said, that tonight we can expect 75
Yeah.
basis point by Fed, and later on the commentary would be the crucial
Hmm.
point.
Correct.
And we believe that there will be no backing off from the Fed,
Hmm.
saying that, okay, this is over. I mean, we won't go beyond this level or
So it's
something
not
like that.
pivoting anytime soon.
Yeah, so the
Hmm.
market is hoping for a pivot, but guess,
Yeah.
I mean, looking at the data, it
Hmm.
seems unlikely that the Fed might pivot.
Got it. Makes sense. Looking forward to see how tonight unfolds for us. Moving forward, the Dow Jones Industry Average, it has seen a deeper retracement, but Nasdaq has barely even seen a very clear pullback. So where is this going to go? What is happening? And what lies ahead for both of these indices?
Sure, sure. So I'll just share my screen.
Okay.
So over here you can see. See, if you see the Dow Jones index, so of this recent fall, it
Hmm.
has nearly retraced around 78.6%. Okay.
Correct.
And it has actually, broken all the averages, and it has seen a deeper correction. But if you see the NASDAQ index, if you see NASDAQ 100 or NASDAQ composite, whatever, so they have not even crossed the 40 day exponential average. And when we speak of retracement, I think they have done around 38.2%. Okay, which is barely anything, as compared to Dow Jones, which is somewhere over here. So this shows that the Nasdaq index is relatively weaker. Okay, now I went into the past, okay, to see
Correct.
where had we seen such situations. Okay, so I could see it in 2000.
Hmm.
So wait, I'll show you that period. So you can see over here. Sorry, yeah, uh, over here. See, at this point of time, what had happened was key Nasdaq over here, it was somewhere around say 1500 kind of levels. It rallied almost 3x and it went to 5000 levels. At the same point of time, Dow Jones had rallied only 70% or something like that. So wherein the over here the low was 7400 and it rallied all the way up to 12,000 or something like that. So this was almost 350% kind of up move, and over here it was barely anything. So what eventually happened was the Dow Jones went sideways. Okay, you can see over here, whereas this kept on falling. And if
Correct.
you notice, and if you would see the chart, then apart from this area, okay, apart from this area, in this entire fall, the 40-day average was not getting breached. So if I put a moving average, so if I put a moving average to this, you can see that in this entire fall, the 40-day average was not getting breached. There was a while,
Correct.
where it traded above the 40-day average, but then again it kept falling until the point that, where the momentum was lost, and eventually, the fall saw a loss of momentum. So, over here, the key point is that that's probably something of this sort is happening right now as well, wherein the Nasdaq index is falling, but the Dow Jones index is relatively flat, or you can say that relatively resilient. Okay, so if I compare it with this time,
Correct.
see, if I compare it with this time, then you can see the Nasdaq index is falling. But if you see Dow Jones indices, you will see sharp pullbacks happening. And to put into context, something of this 2000 period is somewhat happening with Nifty and Dow Jones index as well. I will also show that as to what is happening. But just to put things into context, what is happening right now is that Nasdaq index is the weakest one, and Dow Jones index is comparatively stronger than the Nasdaq index. So in such case, what happens is that the stronger index which is there, they might fall less and they might rise more.
Correct.
But the main point over here to note is that the direction doesn't change. In fact, what happens is that when you see such a sideways consolidation and when there is a panic, okay, because over here you can see Nasdaq has not fallen so much, but the Dow Jones has fallen so much. Okay, so this is always a risk to something which is holding on and it is not falling, which is sort of somewhere, what is happening with the Nifty index as well. But we'll come on to that later. But now if I purely have to go by the wave counts, okay, and I have to see what is happening, then most likely this entire move is one decline. Okay, what we are seeing right now is a retracement, and once the retracement is done, we are probably going to see the next leg of down move. The similar goes for the Dow indices as well. I mean the Dow Jones industrial average as well, and that is the case with S&P 500 and all the other Dow Jones indices. So that is what we think, that probably we are now at a very, very crucial juncture, wherein the deeper retracement in the Dow Jones can possibly end, and we might, see a next leg of down move. But for that, we would need confirmation. We would want to see, Dow Jones going below the averages and all. So we would want that, but looking at the overall structure, and given that the Nasdaq index is not going above the 40-day exponential average, This gives us a hint that maybe if things will not be good today, then there is a good chance that Nasdaq index can see a deeper correction. So if Nasdaq index has to see a deeper correction, eventually I feel the Dow Jones will also get on to that part, and it will not like decouple.
Correct. Makes sense. As mentioned before by you while doing this, you spoke about Nifty. So I'll just quickly move towards Nifty. I have a few questions combined together. After having so much confusion as to where Nifty is going, what is happening, we recently saw it break the September high, which was around 18,100. Is it moving towards the all-time high? Has the bull market started? What has happened?
So I know. So what has happened is that 18,100 was sort of a level. Wait, I'll just show you with the chart. In fact, before answering that, I just want people to see this chart, specifically of 2000, and maybe they'll then understand what we are trying to tell or what we are trying to suggest, the scenario. So I want all the people to understand that the way Dow Jones had gone sideways while the Nasdaq index was falling. Something similar, like I mentioned earlier, is happening with the Nifty and Dow Jones indices as well. So first, I'll just show you that chart, and later on we'll discuss on Nifty. So see, if I zoom out, then you would see something of that sort. The Nifty index is sideways, but the Dow Jones index is falling. If you put into context as to what was happening in Nasdaq and Dow Jones, something of that sort is happening in Nifty and Dow Jones. Okay, so what is happening right now is that Nifty is holding out, which is very good. Okay, which is very good. But then we stand a chance. I mean, there is a risk basically. As to कि अगर ये वाला मार्केट मेरा प्रॉफिट में है, see the normal psychology of the people is कि जो प्रॉफिट में है वो बेचो.
Correct.
Right? So probably Indian market might be the only thing that they might be having profit in. So they would want to encash that. Okay, if things go bad, because this is already going down, and यहाँ पे while the index might be showing at 33,000, but if you see many of the stocks, they have fallen 70, 80, 90% in some cases. Okay, so what eventually will happen is that supposingly if there is a panic in the market and there is again a next leg of down move, so what will happen is that India will become vulnerable. That is because it was the only one that was holding at that point of time. So people would want to encash and want to take away some profit. So given that the risk is there of Dow Jones and Nasdaq and all falling further, like I mentioned earlier, see what happens is that whichever index is stronger, they won't change the direction. They might fall less and rise more. Okay, so in this case, if the Dow Jones index fall, so there is a case that India might outperform. Okay, but it is not that it can go into a different direction.
Correct.
And like I mentioned, and like I mentioned earlier as well, that you would have seen that Dow Jones in a range, and then suddenly it fell sharply. That risk is definitely there over. I mean, in this case, especially for India. So people need to be mindful of that, and that is why in the past, whatever videos we have recorded, we have focused very much on risk management. So see, when the markets are sideways, all you have to try to do is you have to catch the down move, you have to catch the up move, you have to catch the down move, you have to catch the up move. Okay, see, at this point of time, many people would know that we had turned bullish over here around 15,100 because of the extreme FIA positioning and all of that. So at this point of time, we did not know that it will go to 18,100. All we had expected was a retracement. Okay, a retracement of the pullback. And as and when the retracement kept, the retracement levels were broken on closing basis, we kept on revising it higher unless we see a reversal. In that case, we ended up, riding the move towards this 17,600 to 800. And around this point, we started being very cautious, because again, all the data were against the market. So later on, what happened was there was a sideways move, and then there was a correction. In fact, over here also we had anticipated the fall, and
Yeah.
over here, okay, over here you can see the divergence. See, Dow Jones made a new low, but Nifty did not made a new low. And we had highlighted to the subscribers as well that Dow Jones is possibly in fifth wave. And once this is complete, there will be a pullback.
Mm.
So in this case, Nifty was the strongest component, right? Because it did not make a newer low. So it ended up seeing a deeper pullback. In fact, it has surpassed this high. So again, at this point of time when we had turned bullish, we
Yes.
did not know that it will go towards 18,200, 300. We kept on following the levels. If you see the hourly averages, so none of the key hourly averages were breached. So that's why
Mm-hmm.
we keep. I mean, we kept trailing till the point we don't get a confirmation that something is ending. So
No.
at this point of time, right now my data is not updated, but there was a negative close over
Mm.
here. Okay. And now what is happening is that in this entire move, the 20-hour moving average was not getting breached. And
Mm.
today it has just closed around the 20-hour moving average. So if for some reason, the Fed tells something and there is a correction in the market, so this can possibly be a reversal as well, because if people know about the distribution pattern, there is something called as a broadening pattern. Okay. So broadening patterns are a classic distribution pattern. So in this case, what happens is that you get higher highs, but at the same
Okay.
time you get lower lows as well. And this
Mm.
is how it expands. So this leads to a increase in volatility. So now
Yes.
we are almost touching at the upper end as well. So if this is a distribution pattern which is happening, then maybe it is kind of maturing and coming to an end. Now the confirmation would be closing above this key averages, which are right now around 17,450. I think once Nifty closes below this key averages, that is where, then we might say that the distribution has possibly complete. And now maybe the Nifty index, can see the next leg of down move. So this is how the setup is. And if people go to our previous videos as well, I had mentioned that time as well. See, the more fun part is to identify such trends, okay, and ride it till it end, and ride till the end, unless we get the reversals. And when you are in such sideways sort of phase, all you have to do is that you have to try to catch each moves, the tops and the bottoms, like I said. So the whole point was that right now we are stuck in a range. Okay.
Mm-hmm.
So what happens is that people want to capture every move. See, sometimes we can get it right, sometimes we might get it wrong. Okay. But it is very important to understand the broader trend. If the broader trend is sideways, you buy the dips, you sell the highs. That is how normally it works in a sideways market.
Correct.
So I had mentioned this earlier as well. Why whack my brains at this point of time, and try to think of a very big picture when the scenario is more of doom days kind of news flows and all. So because what will happen is that, see, when the next leg of up move starts, you might end up seeing this big move eventually, which would be way bigger. I mean, it would be around 26,000, 27,000 Nifty at some point of time, when the next leg of up move starts. So, why to whack your brains in this 400, 500, 600 points range, where you don't even have a confirmation. Because as you
Correct.
see right now, the moves are diverging. The Dow Jones is falling, but the Nifty is holding out. So like I mentioned, there is a risk right now that the Nifty can decline. Okay. So when you have those risks, you don't go all in. You basically try and save capital. You try to take some trades here and there, and you try to capture all those short moves, and you try to make money in that period, by catching the short-term trends. So, but as of now, just to conclude that we are not out of the woods yet. Okay. So you asked me whether we are going to 18,600. I don't know. Frankly, if we go to 18,600, okay, that is over here, then it would lead a very big divergence between Dow Jones and Nifty. And that would be even more deadly. Because you can see over here, Dow Jones had made a higher high over here, but Nifty had not made a higher high. Okay. So you don't want to see such a big divergence, wherein Nifty makes a higher high and Dow Jones doesn't make a higher high, which is, 1 year kind of time period between that. The bigger the time frame, the deadlier it gets. So ideally, I would not want to see that. If Nifty does 18,600 and Dow Jones doesn't do that, then it will be even more scary scenario. So what will happen at that point of time, we don't know. But as of now, like I mentioned, that there are some signs of Nifty possibly topping out, because we are seeing some negative divergence on the hourly chart and all. But we would need more confirmation, like the break of averages and all. Until the averages doesn't break, all you can do is you have to ride the trend with the help of averages. So the bottom line is that we are almost at the edge now, and we need to see what Fed does, and hopefully we should start getting a trending move. And but yeah, that said, the bearish still is more on the downside, because the US indices are looking actually very weak. The Indian indices are not showing that, but the US indices are a little weak, and we need to be a little careful.
Correct. So we'll get a little more clarity after what Fed tells us today. And I feel like we can confirm things better by next week and see where the trend is actually going. So yeah, thank you so much. It was lovely having and understanding things. Thank you.
Thank you.